Now let's talk about the benefits of mutual funds. Since they are so popular, there must be some benefits. First of all is liquidity intermediation. After all, mutual fund is a financial intermediary and it provides some additional liquidity to the small investors. For this benefit of mutual fund, imagine the following situation. You own Amazon, you own NVR and Alphabet. That's in total over $6,000 invested into these three companies on the stock market. Let's say these are all the assets that you own. Next, imagine a situation where out of the blue your car breaks down and you gotta spend, say, $3,500 to fix that car. If you hold the securities directly, then you gotta sell NVR and one of the other stocks as well in order to have $3,500 cash. You'll actually have more cash than that. And the remaining cash might be unutilized if you don't want to invest it into other stocks directly without using a mutual fund. Or in a different scenario, maybe you had that $6,000, $7,000 in a time deposit where withdrawing the cash early, where creating the liquidity event would be costly for you due to some penalties. Contrary to that, if you had invested $6,000 or more into the mutual fund, by buying, well, let's say 60 shares each at the price of $100, you could sell some of those shares to have enough cash to fix the car, while the rest of your investments will have a chance to keep growing. Another benefit that mutual funds provide is denomination intermediation. Again, in that case, think of an example of Class A shares for Berkshire Hathaway. Say you have $6,000 or $7,000 to invest into the stock market, and for some reason you really want to be part of Berkshire Hathaway. $6,000, $7,000 is of course not enough to buy a Class A share, but if instead you invest into this mutual fund, which in turn holds some of the Berkshire Hathaway shares, you would indirectly own a fraction of that large share. So even though the denomination on this share is too much for you, through this financial intermediary, through this mutual fund, you would still be able to earn a part of this share. Another benefit is diversification. Again, say for example, I only have $3,000 to invest. If I really want to invest into the tech industry, I might buy Amazon, I might buy Google, but that would only be two shares. Two companies, which doesn't really provide me much diversification. If I invest into mutual funds that are specialized in investing into a variety of tech companies, that would give me instant diversification with only $3,000 invested into this industry. Another benefit that mutual funds provide is cost advantages. Say I want to invest several $1,000s, $10,000, $20,000, whatever it is, into several companies, Amazon, NVR, Alphabet, McDonald's, Microsoft, Facebook, whatever not. If I buy each of those shares directly, I would get some diversification since that's quite a good number of companies owned. However, I would have to pay a commission fee on purchasing each of those shares. On the other hand, if I invest all of that capital with a mutual fund that invests again into, let's say, tech companies, I would only have to pay that commission fee once, which would give me some cost advantages. And the last advantage of mutual funds that's often mentioned in finance, however, that I think is actually a questionable advantage, is managerial expertise. Some small investors who are not familiar with finance might feel more comfortable having mutual funds decide which investments to hold for them. But with efficient markets, there actually have been some academic studies showing that sometimes professional analysts are not that much better than, say, monkeys at choosing which assets to buy and which assets to sell. So these are the benefits of mutual funds for individual investors. I hope you've enjoyed this video.